Welcome to the Daily Energy Markets podcast. It is the 23rd of January and it is 10:30 in the UAE, at least a little bit later in Australia, a little bit earlier in the United Kingdom and France, where our other guests are located this morning. And we thank them for getting up early and giving us some of their time. Let's kick off with Peter McGuire out there in Australia, as he's had a few more hours than the rest of us to absorb the movements of the world today. Peter, we're seeing Brent crude oil again, sort of moving in a fairly tight range as we come to the end of this fairly turbulent week. You'd have to say the Davos dramas. I mean, it was like, my goodness, it was, I think, the first time in 30 years that I wished I was actually at Davos. Your thoughts as we come to the end of the week, a week that started with the narratives, however dramatic and maybe hyperbole, that NATO might be ending, to the Carney speech, which did put a fairly significant punctuation point, said out loud what all of us have been thinking for a while, that the sort of rules-based system is certainly over as we knew it. Your thoughts at the end of this week in all of its pieces and what it really means for the commodity markets in Asia?
Well, good morning, Sean, and greetings from Sydney and to my fellow speakers. A couple of things. I think I've got to start with gold nearly touching 5,000, Sean. That's a wake-up call, and silver's knocking on 100 right this second. So it's through 99. Who can believe it? So the first start of certainly this week and this month has been electric. And as that momentum builds, there is obviously a degree of fear and reality that traders are looking, and you said, identify the commodity markets. Industrial metals are sharp and they've been on board this month, have been absolutely dynamic. The likes of tin, copper, aluminium, and zinc. Crude oil staying range bound pretty much. We understand the positioning with Venezuela, then we move to Iran and so on, and the Greenland story, and as you mentioned with NATO. So this week has been very, very, I think people have been waiting on the edge of their seats. You hear Howard Lutnick's views, you heard Carney, you certainly heard President Trump and all the other, speakers. The wake-up call is that I think people are flocking. US dollars come under pressure to the downside. The equity markets bounce back after that pretty heavy sell-off the other morning. And then you've gone really long into gold, Sean. And I think it's hit everyone, even I think most commentators are absolutely gobsmacked to sit here on the 23rd of January at $5,000 gold, $100
what is that, Peter? I mean, 5,000 gold, $100 on silver. In the elevator 20-second pitch moment, what do you think fundamentally explains it?
It's ahead of the curve. We were expecting that, and I think everyone was. Goldman's came out. We might get there by end of first half.
But is it an inflation hedge? Is it a dollar hedge? What is the gold? I mean, this is beyond now. This is like red lights flashing, moment.
I've never seen this in my life, Sean. No, I don't think anyone has. This is crude at 250. This is unheard of. And you've got the central bank buying. We know the usual suspects. You've got the silver market that hasn't got enough production. You've got paper market absolutely jumping in. Physical buyers across the globe stampede. Undersupply of silver. People are saying that it's $200 and then we'll have come up for a breath. Gold sitting now probably a 6 to 6.5 trade, but possibly by end of first quarter. So a
lot might ride on the next move as to who he appoints as the Fed chairman. Let's go to the UK, the other side of the world. David Elwood, Pricing Director, Energy Transition at General Index. David, at the crux of all of this, from the point of our selfish viewpoint of the world, what does it mean for oil markets? Ultimately, this week didn't change very much. Maybe it gave us a little bit of relief that there wasn't going to be another trade war, a big tariff breakout, at least not for now. When you look at the week's activities, all of the headlines, oil has come out fairly bullish.
Yeah, I mean, look, a very good morning from the UK here to everyone. Pleasure to be back with you. As you say, look, it has been a very bullish start to 2026. And if we look at Dated Brent, like the world's most important oil benchmark. Like activity in North Sea has been incredibly bullish since the start of the year. Prices there on that key benchmark have been up by 13% from like the low 60s into the high 60s. They have receded, so we're back now perhaps to say sort of 65, 66. There's been other fundamental factors as well from an oil perspective that have been bullish for crude in the European region, like fresh drone strikes against some of the load-in moorings in the Black
So
Sea.
there's real supply concerns coming out of Russia now. Maybe for the first time since this 4-year nightmare started, Russian supply is actually looking like it's being curtailed.
Yes, I mean, I'm sure Humayun will be in a better position than I to kind of talk through some of the how that is playing through on the trade flows and the balances. But from a pricing perspective, like disruption to the CPC blend, was a particular kind of Kazakh grade, like that was disrupted in the Black Sea. So that was also part of the fundamentals picture in, say, the first half of this month. I see that like there has been news in the last 48 hours or so that some of the moorings there are coming back, and so perhaps that is kind of easing the picture as well. That the disruption in the Black Sea perhaps has put a bit of a pull on some extra cargoes coming out of the North Sea, which might explain some of the bullishness there. And if we look at where we can really see this is where we compare the different regional crude grades. So Brent really spiked above WTI and Dubai this month as well. The spreads really blew out. That they starting to point to come back together. So perhaps things are settling down, but that's the macro picture on oil.
Let's go to France and Humayun Fallakhshahi, and that's of course probably as bad a pronunciation of your name as you'll get today. I get it every day. People call me Seen Ever, so I live with that. We all have to live with that in this globalized world. Even if some people think the globalized world is over, hopefully it's not. We can still try to pronounce each other's names better than I just did. But apologies, Humayun, for that. Head of crude oil analysis at Kepler. Your thoughts, Humayun, again, this sort of bullish start to the new year. When we get back to the fundamentals, this sort of hangover from 2025 that we were going to get to surplus. The surplus is coming, beware, it's only around the corner. We kind of started 26 with the same narrative, and the same outcome seems to be that seems to continue to be the wrong narrative. This is a tighter market than many perceive it to be.
Good morning, Sean. Good morning, David. Good afternoon, Peter. Sean, actually, I have to say you pronounced it perfectly. So
oh, goodness.
I'm really well done. I didn't know you took
living 50
Persian
years
lessons. Maybe.
Thank you very much. Thank you.
No, that was perfect. No, look, it's exactly this. What you mentioned, and it's not a new phenomenon this year. We've seen this for a lot of last year as well, and that really started, I would say, with the the Ukrainian drone attacks on Russian infrastructure that put some good sense of geopolitical risks into prices. And I think we're really seeing a market. There's a big divergence between what fundamentals look like and what they tell us, and on the other side, the actual price action. Now, at the same time, that divergence is not 100% either. That means that despite the big risks that we see and some of the supply disruptions that we've had, as David mentioned in the Black Sea mainly, we still have prices relatively weak. So I would say even though we've had prices kind of have a bullish trend slightly in the beginning of the year, it's not like we've seen Brent go back towards 80 or $100.
No.
Yeah.
It held at 65 when it was threatening to break below 60. I mean, we just did our forecast forum on the 8th of January, and the consistent sort of forecast was 60 on Brent for the year and even below. We didn't have we in our price range offering on our survey to 500 market analysts around the world during the day, we didn't even offer below 60. 60 was our lowest point. The common refrain we get coming back, you got to give us a 50 option. Everybody seemed to sort of come with a fairly 60 minus rather than 60 plus view of the world in 26.
Yeah, absolutely. But I would say, again, you look at what some of the big banks are saying out there, or at least were saying at the end of last year, and a lot of them were still expecting prices to ease and, to average under $60 per barrel. We've been saying since the beginning of the year and before all these, tensions that you've had in Venezuela, Iran, and elsewhere, that we were going to be having an average of 65 more or less this year for Brent. I think that the next, we revise our view every month. So next revision will be at the end of this one, and probably with the ratcheting up of tensions, especially around Iran. I think there's some room here for Brent to be increased a bit more. But I think the range would remain pretty narrow unless we see big action being taken by the US, where you can see a big spike. But then even then, I would expect prices to actually quickly calm down, just like we saw back in June during the 12-day war between Israel and Iran. But again, you look at fundamentals. Right now, we are in an extremely oversupplied market. The oversupply average that we have in Q1 is around 3 million barrels per day. The oversupply average that we have through the year is 1.6 million barrels per day. But that's a bit, I would say, a bit lower than what we used to have, like a few months back before all
You're
the
saying you're
disruptions around
forecasting,
CPC.
Kepler's forecast is 1.6 million barrels a day of supply surplus through 2026.
Exactly.
And that's over the, what is your demand growth forecast for the year? I saw, let's say, others sort of putting it in close to 1 million barrels for a day. Is that what Kepler has, or what's your number for demand growth?
Yeah, we're actually a bit more optimistic and even closer to what OPEC has, I would say. So very close to their number. We have about 1.3 million barrels per day. But the big thing
So
this year,
1.3 to demand growth, and then you're seeing the excess supply above that of 1.6.
absolutely.
Wow. Okay.
Absolutely, yeah. That's that's obviously also mainly due to OPEC Plus, which we think will be in a good position to resume its production hikes after the end of Q1, especially given where prices are and given where the ratcheting up of tensions around the Middle East and Venezuela. But despite all this, we think you compare our oversupply right now versus what we used to have. It's a bit less, though. We used to have that oversupply even above 2.3 million barrels per day a few months back. So the market is kind of tightening, yes.
Okay,
and
let's
that's
go.
supporting the price action.
Peter, again, the week that's in it, the headlines back at the FT and Bloomberg and others, tacos back, right? Trump always chickens out is the kind of headline, one of the headlines finishing off the week as Trump backs away from his takeover of Greenland. But in the middle of all of that was the market wobble. He doesn't like the market wobble. We saw it last April. He backed away when equity markets and the bond markets in the US had a bit of a heart attack. This week, there was something happened in Japan, a Japan tremor. What exactly went on in Japan bond markets that everybody a little bit nervous and maybe forced Trump and his boys to back away?
Well, you had the 10-year and the 20-year and the 30-year Japanese at record highs and back to even 99. I think the 30-year was since its debut. You got the 10-year running at 2.25 in the yield. So you've had what's the consensus as far as yen weakening, Sean? A couple of different components to this. One is a Nikkei 225 that has raced away and now at 53,000. And the gallop and the acceleration from 40 to 50,000 was electric. And it looks like 60,000's in its sights because the momentum that
and is this because the Japanese economy is doing amazing and Japanese companies are making fortunes of profits?
Well, I think they're doing pretty well. They're certainly exporting well, good domestic demand. You've got also you've got a healthy inflation, probably too healthy for Japan, And you've also got a very weak Japanese yen running now nearly at 160. So we had that meeting today. Are you going to see any intervention from the BOJ? Possibly by end of, say, April, you might see another rate hike. And we've just got to see what happens as far as intervention. If it does get to that 160, 161 handle, you'll probably see BOJ move in. And the
Is
other
there anything
side,
connected to the Trump behavior of recent weeks, Greenland, all of the sanction stuff that has given this Japanese bond market some tremors?
I think it was the expectation. You had a rate hike in the last probably 6 to 8 weeks. So that's been the first side of it. You've got the inflation story, and you've got a 2-year running, as I said, at 2.25. I think that's where the smart money was. They're buying Japanese bonds. Many, people are saying, are we in a fear of missing out market? Is it too toppy as far as the Nikkei and the Japanese stock indexes, or is there further room to run? And I think what they're looking at it, there's obviously further room to run. So the momentum is gaining strength, not losing strength. And Asia, in a lot of ways, Sean, is performing incredibly well. When you look at the likes of the Kospi, up one of their indexes, the Kospi 50 is up 130% for the year. The CSI 300 up, I think, at 4,800. It's had dramatic moves, that Chinese market. And then one can't argue with the might of Asia at the moment. And then, of course, the Nikkei 225. So Asia is really experiencing hyper growth. And the tariffs certainly a concern, but they haven't taken the wind out of the sails.
David, while oil has remained relatively sober, a little bullish, a little bearish over the course of the first few weeks of the year, but nat gas, LNG, heating oil prices in the North Atlantic Basin exploding. There's a chilly wind in the air. What's happening in the gas markets?
Not just a chilly wind, but a polar vortex, as they say.
Polar vortex. Jeez, that's a great word. I put it on my T-shirt, my bumper sticker. Polar vortex.
It's a crack.
I mean, if you look,
we even had cold air here in Dubai yesterday. People were like, "Oh my God, it's below 10 degrees." Gee, backers.
Yeah, a lot colder in North America right now, right? From the Midwest across the north, like the eastern seaboard up into Canada as well. Like you look at the weather charts and it's like the deepest blue that they can have to signify how cold it is. I mean, all the headlines yesterday were about natural gas futures shooting up by 70, 80% in one day. Now, like just
can the system handle that? That's like, wow.
Well, to kind of put this in context, like if we actually like that, there have been like it's not the first price spike this winter. So and when we look and actually drill down into some of the natural gas kind of pipeline markets in the US, like whether it's from like you had spikes back at the beginning of December, they kind of bubbled up again at the start of January, and each time have kind of like just very quickly receded. So look, there's different dynamics around deliveries going on and like putting little bits of squeeze on the system. But we're seeing this like yes, the kind of Henry Hub, but also across Florida, the Transco Zone 6 New York system. Like this is something that's kind of affecting and putting pressure on the whole of the system. Let's see how long like this persists. I mean,
does it have any impact on the sort of lingering narrative in the background, this America First narrative that LNG should be curtailed for export in order to ensure that the US market maintains nice low gas prices?
I mean, look, there is regardless of the America First narrative, there's just a very practical, like if the US if US demand shoots up, then they're going to need a bit more of the LNG and they have less to export. So it just ripples. So like we are seeing like sort of the consequential effect of these spikes in the US rippling across the North Atlantic Basin. Like you mentioned heating oil. So look, we see in those premiums, those differentials for kind of market like heating oil markets in New York Harbor, but also in Europe as well, kind of the gas oil 0.1 markets. These are all like getting some strength. The variable here is how long does the cold snap continue, and that'll be the kind of the metric to watch to see like just how much pressure that's going to put on the system. And if we have persistent this kind of persistent polar vortex in North America, then we can likely expect a knock-on effect on LNG exports and tightness in Europe.
Humayun, I wanted to get your views on obviously the Venezuela story, which nearly seems like 3 years ago already that poor old Mr. Maduro was plucked out of his bed. But ultimately, the events of the arrest and detainment and of the Venezuelan president left the Venezuelan government pretty much intact and everything else pretty much intact, except the flow of Venezuela oil. Seems like U.S. Gulf refiners got a happy Christmas, late Christmas present of heavily discounted oil. Vitol got a big New Year's present, being the sort of distributor of that, facilitating that trade. Ultimately, Venezuela so far is somewhat bearish for oil. What's your outlook for that thesis?
So I would say, in the short term, we do actually see production decreases in Venezuela because part of the U.S. blockade is still on. And so, before that blockade started, and I think it was on the 10th of December, you used to have about almost 70% of Venezuela's oil go to China. So all these flows have actually stopped, those flows going to China. There was that story of a few tankers trying to escape from the blockade, putting their signal off. That lasted only about 24 hours, and then we saw them come back towards Venezuelan coast. But yeah, so since the beginning of December, we haven't seen any cargoes move towards Asia, towards China. And we've seen a bit more go to the US, but it's not like, all the volumes that should have gone to China are already going to the US. I think it is going to be a theme that is going to be playing out throughout the year, and we're going to see a lot more buying from the US Gulf Coast. And we're hearing already that Venezuelan oil in the Gulf Coast is currently assessed at around, I think, -$8 or -$9 against WTI. But it is going to be taking a few more weeks and months before this happens. But when it comes to production, you're right that we think by the end of the year, we'll actually see Venezuelan oil surpass the level that it had a few months ago. And we do actually believe that it will get beyond the 1 million barrels per day mark, which it hasn't done, in years, actually, according to us. There are some low-hanging fruits.
It brings not only the crude oil from the dark, if you like, from the dark fleet or the shadow fleet or the sanctioned oil, etc., but brings the oil into the sort of regular market. But also, what impact does it have on those dark fleet, on what is defined as sanctioned vessels and all of that? Does it bring them back into the normal fleet?
I don't think so. I don't think we're going to see that. I think that fleet is going to be kind of fighting each other for a piece of the still sanctioned market. I mean, Venezuela technically is still sanctioned, but I think in probably few weeks and months it won't be. And de facto, it's not sanctioned anymore in the sense that you don't have any more dark fleet vessels loading that crude. But I think, yeah, they're probably going to actually stick to sanctioned cargoes from Iran and Russia. And that is probably not a good thing for them because that was probably a very lucrative business and market to be in for the past 2-3 years, and it's going to be less and less the case. I think it's hard to see them come back to the conventional fleet, actually. And yeah, back on Venezuelan oil, I think there are some low-hanging fruits, and Chevron has been in the country continuously almost, and but the waiver that they've had doesn't allow them to invest in the country, so they're looking to extend that waiver so that they can invest. If they do so,
of course, that's a waiver. That's a waiver from the U.S. This is restrictions imposed by Washington, not by Caracas.
Yeah, absolutely. Yeah, and you also had service companies out of the country. So if these U.S. service companies, so if these are back, if Chevron is able to invest, we're not expecting Venezuelan crude production to obviously skyrocket, But I think by the end of the year, it's fair to assume that it could reach 1.1, 1.2 million barrels per day. Right now, we are just under 700. We used to be closer to 900 2, 3 months ago. So I think it's fair to assume that it could get back to above 1.1,
Well, I suppose it's fair to
1.2.
assume that
And
we've hit the
yeah,
floor, one would think, with Venezuelan crude over the last 30 years, going from 3+ million to well under one,
absolutely.
and starting to now maybe start the recovery. Survey question for everybody, which we haven't even mentioned here today yet. The IEA revised up its 2026 global oil demand growth forecast in its January report. It rose its forecast month on month from December to January by 8%. Which represented about 70,000 barrels. It was the IEA forecast demand growth in 26 to be about 850,000 barrels when they did their December report. When they've done their January report, it was popped up 8% to 930,000 barrel demand growth for 2026. So the question ultimately is this only the beginning of revisions upwards? We already heard from Kepler there. They're already at 1.3. So is IEA going to migrate each month? Do you expect more revisions upwards in coming months on demand growth? Peter, we don't have much time left. Time always runs fast when you've only 30 minutes. But I wanted to get your thoughts on how China, Asia could react to the developments of Davos, where we started our conversation. Obviously, the big one in the middle, Mark Carney's statement that the rules-based system is dead. That means a lot, I would think, for countries like Australia, Korea, Japan, the Western architecture crumbling. Your thoughts on the sort of Asia reaction, and particularly those, including Australia, that are part of that sort of Western liberal global architecture?
Well, I think first off, Sean, that the growth that we've experienced over the last couple of months has been very, very strong. So building on that,
so you love this collapse of the global liberal order.
Well, I'm not saying I love it, but I'm looking at.
Well, if you're long gold, you love it, I suppose.
Well, yes. So I look at these markets and I look at the likes of industrial metals and precious metals, and they've been just mind-blowing move to the upside. I look at Japanese. I mentioned the stock markets, and they've had extraordinary growth also. And then you look at where we are as far as President Trump and of course Howard Lutnick and their conversations at Davos and how that's being interpreted. I feel as though that there was so much. It'd be like fighting Marvin Hagler. You would get hit from head to liver continually, and you wouldn't be able to block. And that's what it's been like the last week because of the volume of what you've seen as far as change. I've just read something here. WHO, America's out of the WHO. So this is.
Do you think? I mean, fundamentally, getting through all of the noise, does Australia, as an Australian going on to the Bondi Beach there having a suntan, do you believe that the US Armada is coming over the hill if you need it to save you? Does Japan still believe that? Does Korea still believe that? Or is China still the big winner in all of this?
I think the US Armada, I feel as though that we're very aligned from an Australian point of view as far as America. And
it's still coming.
I think so. And I feel as though it'll be, again, how does this play out for the next 3 years of the Trump administration?
Well, I wouldn't say you'd get a similar answer in Europe, to be honest, after a week like this. Is the Armada coming? I don't know. It sort of seems like one has to revisit all of these basic principles. David, last word to you and Haibuyun, just sort of on a very much a market outlook here. This oil price range, very tight. Does it continue? Is there anything on the horizon that might see a breakout? Speaking of armadas, apparently there's one on the way to the Gulf next to me here, as Donald Trump said last night.
Yeah, I mean, David, unless you want to intervene, but yeah, I think that exactly. I think the market should be watching what's going on in Iran. You know, there's a lot of obviously uncertainty when it comes to Donald Trump. It's usual, but here I think is on purpose blurring his cards, and everyone's trying to guess what could happen. But obviously, I think if something happened with Iran, I wouldn't expect it to be as easy, I'd say, as what happened in Venezuela. and so it'd be a lot more challenging and therefore a lot more risky. And therefore, the market is going to want to price that risk. Even though I think the impact to supply again would be fairly limited, but given we are around the Strait of Hormuz, you have almost 16 million barrels per day flowing through the strait every day, and very limited options to bypass it. The options to bypass it, we think they're around in total around 9 million barrels per day, mainly via Saudi and UAE. So it's a lot of barrels that could get stuck in the strait. So just because of that, I think this is where we could see a spike.
Well, certainly, whose interest? Oh, 100%. Geez, never seen that before. More revisions upwards. You always know it's not a good question when you get 100% people agreeing. David, last word to you and your thoughts on, is there anything here that gives a breakout for the oil markets as we move deeper into the first quarter?
Well, maybe just a word on refined products. So, like from where I'm sat in Europe, there's been fresh sanctions that came into effect earlier this week from the UK, from the European Union against. So it can't now import refined products derived or refined from Russian crude oil. The market reacted to this news when it initially came out in November. Prices have come down quite a bit. They're subdued. I noticed that like kind of trade flows show that imports of distillates from east of Suez, from the Middle East, from India, are at their lowest for 5 years. Europe is resupplying a lot of its diesel now instead from the US. So I guess what I would say is, like, there's potential for short-term product price spikes if you have kind of refinery maintenance outages, unexpected events there. But the market has recalibrated pretty well. Cracks are not very bullish on distillates right now. So, but let's keep an eye. Hard to track refinery outages. They come unexpectedly. That's sort of in the outage, in the nature of them. But there's potential there for a little bit of short-term bullishness if there's disruption.
Well, let's wrap it up there. Just to sort of close out the week, I think the sort of learnings this week, again, a reminder that where the stock market's at is ultimately, it seems, Donald Trump's reference point, and whenever it takes a move in the opposite direction, he seems to recalibrate his posture, and I think that puts a lot of power in the kings of Wall Street to send a message down to the desk: sell for a few days. Put 1 or 2% down on the stock market whenever they don't like anything. They always say, why aren't the titans of Wall Street speaking out? They're not speaking out publicly, but they are sending sell orders down to their desks to push the market down, I think, and bring Trump back into line in a way that is in their interests. That seems to be one of my takeaways of this week. That the stock market, that sort of Dow Jones hitting 50,000 is still a pretty important mark for Trump, and anything that disrupts from that, he'll pull back from. Peter McGuire, is always awesome out there in Sydney. Humayun Falakshahi in Paris, doing great things. Kepler, amazing year last year. I'm sure another one this year. David Elwood, thank you for joining us. Have a great day, everybody. Great weekend. All the best. Thank you.
Thank you, Sean. Bye.
Thanks, everyone.
Thank you.
Bye.
Very good
Guys.
weekend.